Ladies and gentlemen, good day and welcome to Titagarh Rail Systems Limited Q2 FY'24 conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dhirendra Tiwari from Antique Stock Broking. Thank you, and over to you, Mr. Tiwari.
Thank you. Good evening, ladies and gentlemen. On behalf of Antique Stock Broking, I welcome you to 2Q FY'24 post-result conference call of Titagarh Rail Systems Limited. We are very glad to have with us today Mr. Umesh Chaudhary, Vice Chairman and Managing Director, Mr. Pratish Chaudhary, Director Marketing and Business Development, Mr. Anil Agarwal, Director Finance, CFO and CBRO, and Mr. Saurabh Singhania, Joint CFO and Group Financial Controller. I would like to congratulate the entire team of Titagarh Rail Systems for reporting yet another quarter of very strong performance. Now I would invite Mr. Umesh Chaudhary for his initial remarks on the results and outlook. Over to you, Umesh. Thank you.
Thank you very much, Dhirendra ji, and thank you for hosting this earnings conference call. Antique is hosting this call for the first time, so it's a great pleasure to have you host the call. Very good afternoon to all the participants, and thank you for joining the call. The quarter has been, I would say, in line with what we have been expecting. I had mentioned earlier also that we would be maintaining for the first couple of quarters or 2-3 quarters a run rate of similar nature, which we have done. As far as the two businesses are concerned, freight rolling stock and the passenger rail systems. As far as freight rolling stock is concerned, the performance has been in line with what we had expected. Although we have been able to touch in a particular month about 760 wagons, 759 wagons output, as has been disclosed in our presentation. We are very well on track to touch the 1,000 wagon mark by the end of this fiscal. The order book remains strong and the railways growth trajectory also looks strong, so we believe that there should be good traction for the freight rolling stock business or freight wagon business in the years to come. As far as the passenger rail system is concerned, the quarter was very interesting because we bagged 2 new important contracts, one for Surat and one for Ahmedabad. And after the Pune Metro contract, while the company had got the Bangalore contract by way of subcontracting from CRRC, these 2 tenders are the first direct tenders that we have received from the metro authorities in India. That makes these 2 contracts very significant. What is also significant these are the 2 direct stainless steel contracts, stainless steel car body contracts that we have received from a metro authority. The Pune contract we had was for aluminium coaches. So this kind of establishes Titagarh's forte into both aluminium and stainless steel metro coach manufacturing. This combined with the Vande Bharat order would gives a very good visibility, very strong visibility to our passenger rail systems business. And all our energies and all our focus now is on the execution of the contracts that we have got here. We believe we are confident of starting the stainless steel manufacturing for the Bangalore Metro project within December this year. So in about a couple of months, we'll start production, and the first metro coach should be dispatched within this financial year for Bangalore Metro. So it is the stainless steel line setup is very well on track. Quick update on the Vande Bharat. Vande Bharat project is also going very well on track. We have already progressed on the designing activity. The train is coming out very well. It would be in line with the expectations of the government and the people of India. And we expect to be able to offer to the people of India a very modern and a very unique train travel experience by the new sleeper Vande Bharat that we will be launching or will be offering to the railways. As far as shipbuilding, we had a launch of the first driving support craft. Of course, the shipbuilding has been now merged into the freight rolling stock business, but that is also a significant development because for the Navy, this was one of the kind of vessels that we have been able to get from an Indian source under the Make in India policy of the government. So on the whole, I would say that it's been a satisfying quarter, pretty much in line with what our internal expectations were. Going forward, we believe that we will continue the thrust on growing the capacity of the production and the output of the freight wagons and the passenger rail systems alike. We believe that the passenger rail systems have a much longer runway in terms of the potential that from where we are to where we have to go. There is a very long runway. So just a quick update about Pune Metro also. Pune Metro, we have almost completed 60-70% of the contract, and the rest would be completed within this financial year. With these few words, I would be very happy to answer any questions that may be there from the participants. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kaushik Mohan from Anshika Institute. Please go ahead.
Hello.
Yes, Mr. Mohan, good afternoon.
Hi, sir. Hi, sir. Congratulations for the great set of numbers. Sir, my first major question is on the raw materials consumed. If we see, we have shown that our raw material cost is somewhere around 679.6 crores. So can I understand basically why are we having such a low raw material cost? Because of one impact on the raw material, our gross margins have increased from 21.8% to 22.9%.
The gross margin in our business is a function of the type of wagon that we are producing. When the mix of the private wagon goes up, the contribution percentage is improved. In the current quarter, the share of the private sector wagon has been slightly higher than earlier quarters, and that is the result that the gross margin percentages are better. Having said that, because of the volumes, because of the efficiencies, etc., we have been able to, as is reflective from the last several quarters that we have reported, we have been able to upscale our expected EBITDA margins. But in this quarter, the margins have been even better because of the mix of the private versus the railway execution.
So can we expect the blended margin to be upwards of 12% on the EBITDA level for the whole year?
We have always maintained, earlier we had maintained a margin guidance in the freight rolling stock for 8 to 10%. In the last call, I had mentioned that because of the various steps that have been taken, we would be able to be on the higher end of the spectrum, which is, let's say, about 10-11% or so. On a sustained basis, and I'm not talking about a quarter to quarter, and I'm not also talking about 3 or 4 quarters, but on a sustained basis, let's say over a 8-quarter period, the normal margin of the industry should be considered as 11, maybe going up to 11.5%. But this is on a much longer horizon. As far as the shorter horizon is concerned, depending upon the product mix, the margins can be up and down.
Sure. Thanks, sir. Sir, and in our presentation, page number 3 in business update, we have mentioned that vegans for private players is contributing around 26% of FTRs. That means, am I right to assume that 3,500 crores is coming from private players?
That's the order book for the freight
order book,
about
3,700.
Yeah.
I'm right with assuming that number.
I don't have the calculation with me, but yes, I mean, you can definitely do that calculation, and I'm sure it will be right.
Okay. Thanks, sir. And last and final question. I just wanted to understand, we have in the page 14, we have told about that we are having a leadership position with 32% market share. Can you please explain that how this number is being arrived at?
Sure. Mr. Anil Agarwal, Director of Finance.
So these numbers are taken from the source of the mentioned. So this is based on the total number of wagons that has been dispatched in the respective years for 2021, 22, and 23. So that's how the number has been worked out and been presented over here.
I'm sorry to interrupt. So there's a distortion at your end. You're not audible enough.
Sorry.
Yeah.
Is it better right now?
Yes,
Yes,
sir,
sir.
it's better.
Yeah. So we've given the source as Indian Railways. It's in the Indian Railways network. The domain which is given, and these numbers are being worked out based on the total number of wagons that has been dispatched in the year 2021, 22, and 23. Ordered. Sorry.
Got it, sir. Yeah. So that means that whatever the Indian government has given as an order, that number ka 32% is ours.
That's the percentage, yes.
Okay, perfect. Got it, sir. Then last and final question, how is our development on the wheel set plant?
So that's also on the track actually, so the ordering for the main equipment has already been done. Then the land we have already decided. So everything is on track.
Okay. So by by Q3 or Q4 of FY'24, can we expect the plan to be live?
Actually, contractually, the first week it has to be dispatched 3 years from the signing of the contract. So what we expect to do is that we should be able to produce the wheelchair before that and offer for inspection to the Indian Railway. That's our plan, and we are on track on.
All right, perfect, sir. Thanks. I'll get back in the queue.
Thank you.
Thank you. The next question is from the line of Nikhil Abhyankar from ICICI Securities. Please proceed.
So thank you, sir. Thanks for the opportunity.
Thank you. Please go ahead, Mr. Abhyankar. Hello.
So one moment.
Ma'am, nothing is audible.
Line for the participant has dropped. We'll move on to the next participant in the question queue. The next question is from Sudeep Anand. Please go ahead, sir.
Thank you, sir, and many congratulations for the very good set of numbers. So just wanted to understand how should we look at the margins in your PRS, which is ranging between 2 to 3%, or in fact 3 to 3% around. So once our capacity goes up to 17 cars per month, what kind of a margin improvement we can factor in?
Sure. So the current margins of the PRS is not reflective of the business margins because of the low volume. The fixed costs remaining the same, the margins get impacted. We had mentioned that an approximate margin of 10% in this business is expected at normal margins, at normal volumes. Normal volumes would mean about 20 cards, 15 to 20 cards per month for the phase one of the production cycle. We expect that by middle of the next financial year, we should be able to achieve that run rate and be able to get to the normal margin. The margin improvement in this business will happen once we are able to backward integrate with the propulsion and the components, which is what we are intending to do and which is what we have already on track. We have already set the ball rolling. That should take us another maybe 2 years, 2.5 years, or let's say between 2 and 3 years, we will be able to backward integrate, and we are working on different strategies to be able to become self-sufficient or Atmanirbhar on the propulsion side. And that will give us a substantive margin boost. So to answer your question, by middle of next financial year, we should be able to reach base level of volume, which will give us an EBITDA margin of around 10%. And thereafter, in about 2.5 years, we should be able to, once we are able to get the backward integration piece in place, be able to improve this margin even further.
Okay, thank you. And so just one last one. So looking at our order book, Indian Railways recently floated a tender for 20,000 wagons. So how are we placed to actually bid for the maximum number of wagons? So looking at the current order book, how are we placed, sir?
We are very well placed. We would definitely be participating in a very meaningful manner in this tender. The deliveries required in this tender are stretching up to end of 2025, December 25, which in case the tender is finalized, everything goes well, then this is December 2025, otherwise it may be extended, which leaves us almost 23 months, 23 months from now. And we have enough capacity available with us to be able to participate in a very meaningful manner in this tender.
Thank you so much, sir. That's it from my side. All the best, sir.
Thank you.
Thank you. The next question is from Nikhil Abhyankar from ICICI Securities. Please proceed with your question.
Am I audible, sir?
Yes, you are, Mr. Abhyankar. Good afternoon.
Thank you. Thank you, sir. Thanks for the opportunity. Sir, can you just give us the breakup between private and government vehicles that we have dispatched in Q2? The revenue breakup, basically.
As a matter of policy for competitive reasons, we do not give that. But the percentage of the wagon dispatched to private sector has been better compared to earlier quarters.
Okay. Okay, sir. And sir, we were expecting a larger tender from railways, right? Somewhere around 40 to 50,000 of wagons. So are we expecting some other tender coming up?
Well, our information is as good as yours in terms of newspaper reports, and according to whatever we understand from those, the total demand is not over by this tender that has been issued. This is only for one type of wagon. The other types of wagons that are required are yet to be tendered, and we are hoping that the tender should come out in due course.
Understood. And so there was a moratorium on GPWIS wagons in March. So out of the sanctioned lot, so how much is still remaining for delivery or for ordering or something like that? Can you give some highlight on that?
There are enough approvals that are already active for the GPWIS, and we believe that the moratorium will, by the time the moratorium is there, the pipeline will not get dried up. I do not have the exact numbers with me to be able to comment upon that. But in terms of the traction and the order pipeline, the GPWIS wagons have a very strong pipeline and traction both.
Sir, can you give us the exact number? How much has been sanctioned till date?
That's what I said. I don't have the exact numbers with me as of now.
Okay, sir. Okay. No problem. I'll get back in the queue.
Thank you, sir.
Thank you. The next question is from the line of Srinidhi from HSBC. Please go ahead.
Yeah, hi. Am I audible?
Yes, Srinidhi.
Yes.
Good afternoon.
Yeah. Thank you. Good afternoon. Congratulations on great set of numbers. Sir, building on to this private wagon demand, which continues to be very strong and is very well reflected in your numbers. Wondering, sir, apart from this GPWIS moratorium, are there other factors which is driving this strong demand from private market?
The overall buoyancy in the economy, Srinidhi, is driving the wagon market. Wagon is a very attractive investment in terms of the return on investment or return on capital employed for any investment made into purchase of wagon is very attractive. And obviously, the users, when the base volume of the business is good, like it is for the different core sectors, they are investing into assets that can give them better return. So the moratorium actually has nothing to do with the buoyancy in the market. The moratorium was put because of different reasons. But we believe that the traction in the wagon market or the private wagon, whether it is in GPWIS, whether it is in the container train operator scheme, we've also seen a lot of traction on the container train operator scheme. We've seen a lot of traction on the steel plants buying wagons for their own use. Of course, for the mining and power and all of that. So on the whole, the private sector wagon has seen a good traction. The one factor that can be attributed is more, I would say, user-friendly approach of the railways towards investment into wagons, which has encouraged private sector to continue their investment in buying wagons.
Right, sir. So good to hear. Second question I have, sir, is on the potential new entrants in the wagon industry. We saw that industry almost doubling or even more than that in just couple of years. So are you seeing new players entering in this wagon manufacturing industry? And can you also take us how long is the approval process for a new entrant to come in this industry?
So we've not heard of any new entrants apart from the ones that were already existing that are entering into the industry as of this moment. But of course, it's an open industry and people can enter. The normal cycle time for a new entrant to get established and come to the regular bidding and regular order taking cycle, because it's also a safety product and we run the railways on a mixed track. So as a result of that, normally what we have seen is anything between 3 to 6 years. And if you look at the last 2 or 3 entrants, they took at least 2-3 years, 3 to 5 years, I would say, for being able to establish themselves as a regular manufacturer.
Right. And last one, if I may, on the receivables, sir, we saw receivables increasing from March levels. Wondering what is really driving that and what level one can expect that these stabilize by the year end?
This is a temporary phenomena because of the sales are back-ended in the quarter towards end of the quarter. And also the mix change between private and the railways. Normally the payment terms are maybe just a couple of weeks more in the private sector segment. So this is a temporary phenomena. As far as the working capital cycle is concerned, we are more than confident that we will be able to maintain our targeted working capital cycle of net working capital days of under 30 days as far as freight rolling stock is concerned.
Thank you, sir. All the very best.
Thank you very much.
Thank you. The next question is from Balasubramanian from Arihant Capital. Please go ahead.
Good evening, sir. Congratulations for good set of numbers. Sir, I have seen in that railways data, I think railway volumes have been declined, not only Titagarh, other competitor players also. Private wagons volumes have been increased. I just want to understand, these private volumes are export markets or domestic markets we have supplied? And if you could talk about what kind of export opportunities we have, any new order pipelines, and any about how about inquiry status on that exports market?
So the private wagons primarily are domestic demand, and indirectly they are going to the railways only because they are operated by the Indian Railways. It is the procurement channel that becomes through the private sector, and the usage is of the private sector, which in any case, even if the railway buys, the ultimate customer is the private sector or the core sector. As far as export is concerned, barring sporadic wagon exports to neighboring countries or to some African countries, India is not, or there is not a huge export market for the complete wagons per se. The reason being the logistics cost. And just to give a comparison, a wagon that costs maybe about 40 lakh rupees kind of occupies the same shipping volume compared to a coach, which costs about 10 crore rupees. So the shipping cost as a percentage of the capital cost in a wagon becomes very high. As a result of which, wagon is a more localized, domesticated industry and domesticized industry, sorry, not domesticated. But there are sporadic demands that keep on coming up for wagons. And as a company, we have also exported wagons to neighboring countries, into some African countries in the past.
Okay, sir. Sir, could you please share volume numbers for freight and passenger rolling stock for this quarter?
It is already given in the segmentals.
You don't give the break up between private and general.
No, it's asking passenger and freight. Your question, sorry, is freight and passenger?
Volume, sir.
Yeah,
overall volume.
We've given the freight and the passenger in the segmental report.
Okay, sir. Okay. Okay, thank you, sir. That's it from my side.
Thank you. The next question is from Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, thanks for the opportunity and congrats on a great set of numbers. So, sir, I had a couple of questions. One is on metro. So, in your presentation, you mentioned that.
Sorry, we can't hear you, Mr. Kapoor.
Sorry, sir. The line for the participant dropped. We'll move on to the next participant from the name of Kunal Sheth. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. Sir, my question is pertaining to the passenger rail segment. You did mention about the, backward integration could lead to further improvement in margins. So, if you can, just talk us through about, what are the timelines that you're keeping in mind in terms of what is usually the timeline that it takes, for some of these, products to get backward integrated, as in, put up a line, approval process. Are there any major approval process that are, required to be in place?
Sure. Yeah, good afternoon. So, as far as the bulk of the backward integration margin, which is already on track, is the propulsion systems. And we have already set up our facility for the propulsion systems. For some of the propulsion systems, we have also received approvals, for example, the traction motors, etc. But then they have to go through a very stringent trial process. And some of the other, like the metro propulsion, we are still on way to develop those systems by way of our own engineering setup. And we are also exploring some technology tie-ups, etc. So all told, we believe for the propulsion systems that we are now wanting to backward integrate in the first stage, we will be able to get this on track, as I said, between 2 to 3 years from now, wherein we expect that we will be able to utilize our own propulsion system for the metro coaches manufactured by us.
Okay. And for other products that you were, planning to backward integrate, any timelines and approvals on that one?
I'm sorry, I couldn't hear you.
So apart from propulsion systems, any other products that we're looking to backward integrate, and any timelines and approval process that we will have to go through on those products?
Yeah, so those processes are already ongoing. Some of them have already happened. Some of them will continue to happen. And the timeline that I'm mentioning is including those approval processes.
Sure. Okay. Great, sir. Thank you so much, and best of luck for the future quarters.
Thank you.
Thank you. The next question is from the line of Hemant, who is an individual investor. Please go ahead, sir.
So congratulations on a very good set of numbers, and thank you for providing me the opportunity. So first of all, I would like to know, out of the total order book of nearly 28,000 crores, what is the share of Titagarh? Because as I understand, we have the 51 or 52% share with the rail and the 50% the RK forging also, right? So out of the total order book, what is the actual share of our company?
Good afternoon, Mr. Hemant. The order book reported is only considering our share of the order. So wherever the share of Titagarh is, say, 51%, the order book of 28,000 crore is considering 51% of that particular order. So 28,000 odd crore that has been reported is our share of the order book.
And sir, one more thing I wanted to ask you, we are planning to ramp up our production facility, right? From 20 coaches to 70 coaches per month and 7,000 wagons per month. So what is the timeline for the completion of the same?
As far as the freight wagon ramp-up is concerned, as I had mentioned at the beginning of the call, we will be able to achieve that by the end of this financial year. As far as getting the capacity to 70 cars per month is concerned for the passenger coaches, it is going to take us about 3 years to 3.5 years from now to be able to reach that full capacity.
And sir, when will our forged production start? The joint venture which we have with Active Forgings?
The wheels.
Hello, Mr. Hemant. You are not audible enough.
Sir, I wanted to ask you, when will the commencement of the forged wheel production? The joint venture.
The forged wheel, according to the contract, is supposed to start before April 2026, and we believe we will be able to be ahead of that.
Okay, sir. Any revenue guidance for the next year?
No, we do not give, as a matter of policy, any revenue or any other guidance. But this goes through the order book and the outlook of the company.
Okay, thank you.
Sorry to interrupt. Mr. Hemant, you can come back in the question queue for additional questions.
I'm doing that, ma'am.
Okay. The next question is from Viren Deshpande from Alpha Peak Investments. Please go ahead.
Hello. Sir, good afternoon and congratulations on the excellent numbers we have been able to do in this quarter as well as the first quarter. So, do we expect the second half of the year to be significantly better than the first half because our ramp up of wagons, etc. will continue?
Good afternoon, Mr. Deshpande. As far as the ongoing quarters, as I mentioned, that we would be around similar levels as far as the freight rolling stock and the passenger rolling stock is concerned, wherein the ramp up for the freight rolling stock will start happening in the end of the current fiscal. So we will really take the advantage or see the advantage of that coming in the next financial year. As far as the passenger rolling stock is concerned, we are now in the process of finishing the execution for the Pune Metro, and we will start Bangalore Metro. So there may be a few quarters where before we are able to, maybe 2-3 quarters before we are able to ramp up the capacity to the desired level of 15 to 20 cars per month.
And the contract with railways, etc., which we are having with the major contract, are basically the earlier experience few years back was that the government contracts normally get delayed inordinately or the payment terms are not quite good. So what is the experience from this after this new government has come in and the new orders which we have secured? So is the experience far better than the earlier few years?
Well, the working of the government is significantly better in the current government in terms of decision making, in terms of execution, in terms of overall planning. Having said that, knock on wood, in our industry, the orders which are placed, because these are capital goods, they are all against sanctioned budgets. So we've never in the last 26 years of our history had problems of the nature that you just mentioned in our industry. And we hope that will never happen in the future also.
So we are getting good terms for the payments, etc., also on time.
They are contractual terms. I will not call them good or bad, but the payments are made within the contractual terms.
And the last question is regarding how much capex do we plan this year, and do we need to raise any funds for that purpose?
We had already announced capex at the beginning of the fiscal that we would be investing about 600 to 700 crores overall, and as of now there is no plan to raise any capital. As and when if there is something, definitely we will come back to the market with it.
Thank you, sir, and all the best.
Thank you, sir.
Thank you. The next question is from the line of Bala Subramanian from Arihant Capital. Please go ahead.
Thank you so much, sir. Sir, the private vehicle side, how much advance mobilization we are getting?
Different contracts have different advance clauses. It will not be possible for us for competitive reasons to speak in definitive terms of different contracts. But different contracts have different payment conditions and different contractual conditions. And these are not one orders, these are several orders that we keep on getting from the private customer.
Sir, based on historical data, any range in percentage terms, 5%, 10%?
It can be anything from 0 to 50%.
Okay, sir.
We have seen contracts with 0% advance and we have seen contracts with 50% advance.
Okay, sir. Okay. Sir, I'm unable to get the volume data. So in September month, we have dispatched 759 wagons. We can assume in that range only we can able to another 2 months also, July and August, 700 in the wagons on the right side.
I'm sorry, I'm not able to understand your question.
In September month, we have dispatched 759 wagons. Is that fair to assume July and August 700 wagons in that range on the right side?
So we've given the peak production that we have achieved. We would not be able to discuss on the monthly production data. As far as the total overall quarterly performance is concerned, it has been, as they mentioned, in line with our expectations. We believe that we will be able to maintain an average run rate between 600 to 700 wagons per month and gradually ramp it up to reach 1,000 wagon run rate per month by the end of this financial year.
Okay, got it. Thank you.
Thank you. The next question is from the line of Devrat Mohta from Capital Group. Please go ahead.
Hi, am I audible?
Yes, sir, you're audible.
Hi, firstly, congratulations on good results. I do have one question. On the cash flow statement, there's been a build-up in receivables. Can you just talk to what's happened there?
Yeah, thank you very much. I just answered this question that this is a normal temporary phenomena because the sales were, the bulk of the private sector sales happened towards the end of the quarter. So the normal payment term cycle gets triggered and at the particular point of time the receivables became higher, but then they start getting normalized as the payments start getting due.
Got it. And then secondly, on the passenger rail business, when do you really expect margins to start improving to, your...
On the passenger side, our average, the blended margins should be able to normalize when we reach normal levels of volume, which is between 15 to 20 cars per month, which we are expecting to achieve by the middle of next financial year.
Got it. Thank you. Those are the questions that I have.
Thank you, sir.
Thank you. The next question is from the line of Shirom Kapoor from Prabhudas Lilladher. Please go ahead.
Hi, thank you for the opportunity. I was having some network issues earlier. Am I audible now?
Yes, sir, you are.
Great. And, pardon me if there's any repetition as my call dropped off. So basically, in your investor presentation, you have highlighted a 50 to 70,000 crore opportunity size in metros. Is this purely for rolling stock?
Yeah, I will request Anthony to...
Yeah, this is for the metro rolling stock. Yeah.
Okay, and what is, typically, over how many years are we expecting this sort of opportunity size to, how many these tenders to come out, and what is, Titagarh's typical win rate or market share in metros? How much can we typically expect Titagarh to win out of this entire opportunity size?
So as far as the timing for this business to materialize is concerned, it is a lot dependent upon the execution of the metro project. But this is based on public data that is available, which we have quoted. And we believe that this should happen, get executed over the next between 5 and 7 years or something of that nature. In terms of our own market share, we are a new entrant in the market, and we have been continuously and steadily establishing ourselves. We believe that we will be a very strong contender for larger market share because of the capacity build-up that we are doing and the backward integration that we are doing, which will make us the only Indian company which will have both a complete end-to-end design to manufacture to service facility for comprehensively aluminium and stainless steel metros with their own propulsion. So that will give us a huge competitive advantage, and that is the whole basis on which we are strategizing our investments and our positioning in the market. We believe that the Indian market, we can offer the best, most competitive product, and therefore gain substantive market share.
Understood. That's very helpful, sir. And moving on to now the Vande Bharat opportunity. So I understand, you've already received a tender to make 80 cars for the 200 out of the 200 train tender. Going forward, there's a plan for the government to have 800 Vande Bharat trains by 2030. And I believe, 400 have already been tendered out, including initially plus your 200 and another 100 aluminium trains. And so in the remaining 400, will Titagarh be, participating in all those tenders, including the aluminium trains? And, what is the opportunity size still available to Titagarh in Vande Bharat?
Well, we believe that the aspirations of the new India is very clear that, gone are those days wherein India was satisfied with the old kind of antiquated train system or travel system. So we believe that this opportunity is not going to stop with 400 or 800 trains. There are the population of India would demand better trains at the like of Vande Bharat. And as far as Titagarh's position is concerned, as I just mentioned for metro, the same applies for Vande Bharat. We are establishing ourselves, and I mentioned in my opening remarks that we will be in due course in a couple of months, maybe coming out with our design that we are conceptualizing for the Vande Bharat, and the country would see that the kind of future of train travel that our Vande Bharat will offer.
Understood, sir. And do you have any kind of value that you could assign to even typically what the cost of one train would be, and even for the future ones, given that they're going to be more modern and there's going to be sleeper versions. So if you could give an estimate of what a per train cost or opportunity size for Titagarh.
It is in public domain that a train is between 130 to 140 crore, depending upon whether it is a stainless steel or an aluminium train. And going forward, I think the benchmark is already set, so it is going to be derived. The pricing is going to be derived from here.
Understood. So thank you so much, and all the best.
Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Srinidhi from HSBC. Please go ahead.
Yeah, hi. Thank you for the follow-up opportunity. Umesh sir, in this contract that the company had won for 24,000 wagons back in May 22, that contract had this option clause giving railway rights to procure 30% additional wagons at same pricing with same price variation clause. Wondering how often does railway exercises these quantity option contracts?
Since there's no obligation on the railways to exercise this option clause, this is, as the word suggests, an option of the railways. But in the past, we have seen more often than not the option clause getting exercised, and because the railways' demands do not slow down, so we believe that the option clause is something that we have seen in the last several years in most of the contracts have gotten exercised. So we need to wait and watch to see what the railway does with the current contract.
And does similar contracts are there in Vande Bharat contract as well, or these are typically wagon contracts which has these option contracts?
Option clauses are there in the Vande Bharat as well.
Right. And last one, sir, if I may, a few of the investors had this query relating the how is company like the Vande Bharat contract is a consortium contract, and how are the partners basically protected from the possible execution challenges or failure from other partners. So are there terms in the contract which protects Titagarh in both supply as well as O&M from the possible challenges from the partner execution?
Absolutely. It's a very interesting question. And yes, the consortium agreement between us and our consortium partner adequately addresses such eventualities wherein the failure or potential failure or delay by one partner does not impediment the capability of the other partner to move forward and perform. Consortiums are very common in this industry globally, and over a period of time, consortium arrangements have matured and consortium agreements have matured to an extent that most of the risks that are foreseeable are mitigated to the best possible extent.
Right. So good to hear, sir. Congratulations and all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Indrajit Chakravarti from Script Trading Corporation. Please go ahead.
Namaskar, Mr. Chaudhary and your team. Congratulations on a great set of numbers. I need a small clarification regarding the size of the upcoming wagon tender from Indian Railways, which is being spoken about. Is it for 20,000 wagons or is it for 50,000 wagons? If you might please clarify. Thank you.
Namaskar, sir. As I just explained a few minutes ago, as far as our knowledge is concerned, there is an echo.
Sorry to interrupt, sir. There is an echo at your end.
Hello? Hello?
Hello?
Hello?
Hello?
Yes, sir. This is better. Yes, sir. This is better.
So I was mentioning our information and our knowledge is as good or as bad as everybody else. Are available in public domain, but
Hello.
Protected for the demand for about 50,000, out of which 20,000 have already been tendered, and this is only for one single type of wagon. So we are hoping and waiting for the railways to come out with a tender for the others.
And if I may add one more question, small thing, which is this Vande Bharat trains which you are making right now, that is for sleeper coaches or just just chair car kind of things?
Now the Vande Bharat that we are making are sleeper trains.
Hello, sir. Hello.
Yes.
Sir, you were not audible in between.
I'm saying the Vande Bharat that we are making are sleeper trains. These are sleeper coaches.
Thank you very much for your clarification. Thank you, sir. Best of luck.
Thank you. The next question is from the line of Raja Mohan V, who's an individual investor. Please go ahead.
Yeah, thank you for the opportunity and congratulations on another solid performance. My first question was of the passenger rolling stock order book of 13,870 crores. What would be the metro component and what would be the execution timelines? Would it be, say, 2-3 years kinds?
So out of the order book that we have for the passenger rail system, sir, the bulk is of the Vande Bharat. And metro component is, as we mentioned, we have now 3 projects after Pune, Bangalore, which is a subcontracting project. Then we have Surat and Ahmedabad. There are, of course, new opportunities that are in the pipeline, and we will be participating in trying to bag them. The current orders that we have on an average about a 3.5 year kind of a delivery schedule. So these will be executed in the next 3.5 years time.
So roughly would metro be about 2,000 to 2,500 odd crores if you add all the...
It would be, let's say, out of the total business volume, it would be about 15%, approximately 15% should be around that much.
Fine. Further, with significant ramp up from, say, 5-6 coaches to 70 coaches that you envisage in the next 3 years, can you roughly give a roadmap on average monthly coaches that one can see being delivered in FY'24, FY'25 and FY'26 as per your internal estimates?
So we would only be able to give you the milestones that we have disclosed, which we have shared in public domain, which is the important milestone, which is we will be able to reach our first targeted capacity of between 15 to 20 coaches by the end of next fiscal, middle of next fiscal, and we should be able to reach the full capacity in about 3.5 years time.
Fine. One final question on freight rolling stock. You have famously guided to reaching 1,000 production capacity by this year end. Would it mean we would have average dispatches of, say, around 800 for the current year? What would we reaching 759 in September? And extending this further to FY'25, would we then be easily achieving average 1,000 or more dispatches for FY'25?
So as I mentioned a little while ago, we are now at about between 600 to 700. I think a 1 month dispatch figure should not be taken as a very kind of gospel benchmark. Right now we are at an average of 600 to 700 wagons. We intend to slowly ramp this up to 1,000 wagons, which we will be able to reach by the end of the year. So yes, as far as the next year is concerned, we will target to be at around, say, 1,000, maybe 10%, 5% here or there, average run rate in the years to come.
So the next year could see a significant, say, 50% kind of volume growth at least in freight rolling stock.
That's right.
So, I'm very sorry to interrupt.
Thank you. That's it. Thank you and best wishes.
Thank you, sir.
Thank you so much. The next question is from the line of Mr. Pankaj from Affluent Assets. Please go ahead.
Thanks a lot for taking my question, and congrats for very good set of numbers. Sir, in answer to one of the questions earlier, you mentioned that the cost of making the Vande Bharat train would be anywhere between 130 to 140 crores, depending on the material used. So, and we have quoted accordingly, if I am not wrong, in the bid. But when we were when the bids were opened and when we bagged the order, we had to match the price set by the first L1 bidder. So, do you mean to say that in this contract, the contract for 80 trains, we would be making losses or maybe minimal profit just so that we can make or are we very aggressive? Are we very aggressive in participating in this contract?
So, we have already, in the last, maybe last or last before call, we had explained this in details, but I'll just briefly sum it up for you. As the tender for Vande Bharat is concerned, we were L2 in our bid, and of course the L1 was an aggressive price. The similar Vande Bharats are being produced by the railways, and the benchmark pricing is lesser than the price that has been offered to us. So, in a nutshell, we expect that we are confident of being able to maintain our margin of around 10% for the train. For the service, the margin should be better. There is, of course, this is a very large tender and one of the larger ones in the world. So we will be able to have a substantive procurement power, and considering the volume, 1,280 coaches is a very large volume. So considering the volume, we have done our homework, and with the right make and buy decision, we will definitely end up with about ballpark of 10% of EBITDA on this business as well.
Sure. Secondly,
sorry to interrupt, Mr. Pankaj. Could you rejoin the question queue again for follow-up questions?
Sure.
Yeah. Thank you so much. Ladies and gentlemen, we are taking the last question for this session from the line of Mr. Priyesh Babaria from the company Max Life Insurance. Please go ahead, sir.
Thank you, sir. Thank you so much for the opportunity, and congratulations for the good set of numbers. So, sir, a couple of questions from my side. First, on a freight rolling stock, especially on export side, when government had announced India, Middle East, European corridor, so we thought that we finally will say that we will export the large number of wagons to these countries, or will export from the India itself. So after erupting the Israel war, so where do you see the exports actually going ahead, and where we will see the export traction? We will see kind of in a meaningful way to those countries where we are not funding from the country perspective.
See, that's a very thank you very much, sir. But that's a very macro geopolitical kind of a question, which is very difficult to be answered at this point of time. I do believe that regional conflicts will not, for a very long period of time, upset global alliances. We have seen that last year in other parts of the world, where the regional conflicts have kind of precipitated for much longer than desired or expected. But that has not stopped or deterred the world from coming together or to continue with the economic developments by way of global alliances. So in terms of, whether it is a corridor that is being planned, or in terms of alliances for funding and exports, etc., we do not see that there will be a long-term disturbance or value destruction or kind of value proposition destruction on those. In terms of export market for wagons is concerned, as I had also mentioned that, there is a limited niche market for wagon. There is a larger market for wagon components because of the sheer logistics cost of wagon being shipped out. The volume being the same for a commodity of a product which costs about 40 lakhs on an average compared to a coach which costs about 10 crores. It does not make too much of an economic justification for long distance cross-border export or supply of wagons. There are niche business opportunities that come, but they are more localized in nature.
Sure, sir. Thank you. My second question is regarding the propulsion.
Mr. Priyesh. Thank you so much for the question. Due to shortage of time, we will be ending the call here. So I would like to hand over the conference over to Mr. Dhirendra Tiwari for the closing comments.
Sure. Thank you. On behalf of Antique Stock Broking, I thank the management team of Titagarh Rail Systems for giving us the opportunity to host the call. I also thank all the participants. Before I close, would you like to say any closing remarks, Umeshji? Then we can close.
No, thank you, Dhirendra ji, and thank you for organizing such a vibrant call. Was very interesting to interact with all the participants. And we hope to keep in touch post our next earnings call after December. And thank you everybody for your good wishes, your continuous support, which is very important for the company. And we believe that the company is in a very interesting position wherein while on the freight rolling stock, we have already kind of stabilized or traveled the journey to a large extent. But on the passenger side, we are still, as I mentioned in the opening remarks, we have a long runway and then we have a long flight ahead of us. So we are very excited, very committed towards this journey, and we hope we will have a successful and a very fruitful road ahead.
Thank you very much. Thank you, sir, and thank you all the participants. Now we can close the call.
Thank you, sir.
On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.